So in my opinion, that is a good thing. That means there's more utility and growth for XRP and of course another applicant. Now from the next peak right here to there, also 183 days. So what are the odds that this rectangle and this rectangle were each 183 days apart? If they build applications and they're using it at scale and there are billions of transactions per day, and yes, HBAR, the token, theoretically would increase in price due to the demand and a scarce supply eventually. But it's just been pretty crazy looking at this, and we have yet to have like another big wave, meaning that we are actually finding our bottom for HBAR before we get that next impulse up. What's up guys, Kevin Cage here with another crypto update. This video is going to be jam-packed. I hope you enjoy and let's kick it off. Alright, hope everybody's doing well today. It is good to be back. It has been a wild week by me. Property is flooding again, which is just awesome. It's one thing after another, but we are another day in this bear market, which means we are one day closer to an inevitable retracement, if not the next bull market. Now diving into some quick stats per the previous video. So we shared Swift estimating the volumes of tokenized assets could reach $24 trillion by 2027. And I saw some people just saying, hopium or you wish. These are direct statistics from Swift that transacts over $5 trillion per day. Now, I'm not just saying crypto. This is tokenized assets, globally illiquid and liquid assets, a variety of asset classes. This is a real stat. This is not hype. This is fact. And we can see that BCG, another major firm, estimates by 2030, the tokenization of global illiquid assets could reach 16 trillion to as high as 68 trillion. And the tokenized market is estimated to be 10% of global GDP by 2030. This is trillions, if not dozens of trillions of dollars in the future. And when you understand, we already had the revolution of the Internet of Information. Now it's the Internet of Value. All of these asset classes and tokenized markets are going to have bridges and be interoperable with one another. There will be liquidity in some ecosystems. We're going to have atomic swaps, you name it. So a lot of things will be tokenized: securities, commodities, real estate, art, collectibles, currencies, by the way, derivatives, and then of course any other types of potential NFTs or non-fungible tokens. This could be identification, it could be intellectual property, it could be a deed to a home or a car title, anything. All of the information that exists on the internet could exist in some form of a tokenized asset or an NFT. And of course, you've heard of soulbound tokens, which are tokens that are actually unable to ever be transacted. And that could be key information for your social security number or your passport number. And I provided the sources down below right on Swift's website and then BCG if you just wanted to check those stats and those numbers for yourselves. Now, this is also huge. The world's largest banks, custodian banks that are creating crypto trading desks today. You can see BNY Mellon starts crypto custody service. Financial regulators in New York to begin holding Bitcoin and Ether for certain customers. So I wanted to emphasize BNY Mellon, 42 trillion assets under custody, 1.8 trillion AUM. We have Charles Schwab, Fidelity, and Citadel working to launch a crypto exchange. So you can see 4 trillion, 7 trillion, 4 trillion, 2 trillion plus. And then of course, Coinbase was actually chosen by BlackRock, one of the largest custodians, $10 trillion assets under management for crypto trading and custody. And then State Street is just another behemoth within itself. We know that we shared that video 2 years ago, and we can see State Street all in on tokenization, the US bank's push into digital assets. And these are massive institutions. I know crypto is volatile and bear markets are brutal. There is no way to sugarcoat any of it. It's hard. Many projects will never recover, but those that survive, have ample funding, potentially regulatory clarity in the future, will thrive. So even totaling up, even just the AUM, to be conservative, imagine a fraction of a percent of all of this money entering the crypto asset class. Then imagine the trillions of dollars of even volume. We can see Swift for tokenized assets, 24 trillion by 2027, 4 years away. Let's just say 4 to 5 to be conservative. If the securities market and other asset classes begin to get tokenized and there's liquidity in volume of 10 trillion or even 24 trillion like they're predicting, tokenized asset classes in some form will be interoperable, if not existing on a distributed system. It might not be perfectly permissionless and open. It might be a hybrid and have some private features, but it's highly probable they're going to be leveraging the benefits of crypto, if not actually being plugged in or running on top of some of these networks that we know today. So just to emphasize, the world's largest organizations and custodian banks are paying attention and entering the crypto market. And when these organizations are on MSM and the mainstream news, they're telling us crypto's going to zero, don't pay attention. Yet JP Morgan holds a bunch of Ethereum. We know that R3 already partnered with NASDAQ years ago. We know that Bank of New York is now creating custody for crypto assets, as you saw Bitcoin and Ether. And when we go to PolySign, building the future of digital assets, we can see state-of-the-art scalable infrastructure for financial institutions to fully leverage their digital assets. And as we scroll down, who is here? David Schwartz of Ripple, the founder and president Arthur Brito, one of the co-founders of the XRP ledger. We have Antoinette, formerly the Chief Compliance Officer of Ripple, who also presented at the International Monetary Fund, and then also Tim Keeney, retired Vice Chair of Bank of New York, BNY Mellon, right there, custodying 25% of global institutional assets. You have people of this caliber looking at custody for digital assets for financial institutions, attached to the largest custodian banks in the world. So Bank of New York, State Street, you name it, all of these organizations are paying attention. I mean, even on State Street's website right here, you can see a variety of solutions. Let me find it right here. Digital asset services, tokenization. They actually have blog posting on crypto specifically. We have trading and custody of these new digital assets. Now to go back here, there's a really cool website, you can Google it, looking at the Bitcoin obituaries. Bitcoin has died over 467 times. We can see different years, 2010, 2015 during the bear market was brutal. You can see that number is a tad higher. We can see crypto is dead all throughout MSM. During an 86% crash, during an 84% crash, during a 72% crash, we see the same thing time and time again. And today, thus far, we've crashed about 77% down. And yet again, crypto is dead. We also have Jim Cramer right here. As I predict another weak year for crypto, I do ponder how many people are still involved. Now many millions of people. Here we have Greg saying, let the bull run begin. And same thing with XRP Crypto Wolf. Jim Cramer is bearish on crypto this year. Shocker. Now we have this article, Bitcoin whales in one of the most aggressive accumulation cycles in history. And according to Santiment, small to mid-sized Bitcoin addresses, 0.1 to 100 Bitcoin, have been on one of their most aggressive accumulation cycles in history, adding 9% to their holdings in just the past 6 months. That's huge. So we can see as this chart is going up, they are in accumulation. They are increasing the amount of Bitcoin they are holding in these wallets. Notice this slope is steepest when prices are low. This is smart money in my opinion. Now, whether it's the bottom or not, we have to agree. We are over 1 year in this bear market. We are absolutely close. And in the long term, I still think this is a heck of a buy. Not that I care for Litecoin, but we can see even Litecoin increasing. And no, I'm not advocating for Litecoin. We can see ADA getting that little slope. And after these huge crashes, of course, we're going to see some buy pressure come in, but just wanted to share. We can see right here, 2 weeks before November 2021, Bitcoin's all-time high, shark and whale addresses holding 10 to 10,000 Bitcoin have dumped a collective 10.75 billion on the market. This drop, combined with circulation drying up, has led to a sputtering end to 2022. That's almost $11 billion right there, collectively dumped by some of the largest Bitcoin wallets in the world since its all-time high price. You can see supply on exchanges right here, this red level, percent of total supply of Bitcoin on the exchange. So typically when there's a lot of Bitcoin on the exchanges, not actually stored in different cold wallets, I'm usually scared of a big dump. But the good thing is, look at this. We're at a very, very low level right now for the supply of Bitcoin on exchanges today. Next up, Roth Economan pointing this out. So a brief overview for folks reading about Ripple and XRP use in 2023. Now, years ago, Ripple offered 3 products. We have Xcurrent. This is payment messaging. Think of it like what Swift later copied and pretended it was their own, Swift GPI. Now we have XRapid. Today, this is actually on-demand liquidity, which was XRP as a bridge currency. So anytime you see ODL, you can assume this is XRP as a bridge asset between 2 different currencies. We can see also XVIA. This is an API solution for corporates. So we have companies originally signed bilateral agreements with partners to move value. And now these functions are integrated into one single service called RippleNet. You can think of it like a Ripple network, a payment suite managing messaging with the option to use on-demand liquidity and XRP using product if desired. Bilateral agreements are no longer necessary between users. So Roth goes on to say, if you see someone using Ripple or RippleNet, they likely only use it for messaging, not XRP. If ODL is actually specified and mentioned, then value is moved using XRP on the XRP ledger. So for all of the users today that we see using Ripple or a RippleNet member, it's no guarantee they're using XRP today. The good news is that is just another customer that could potentially be using XRP in the future. So in my opinion, that is a good thing. That means there's more utility and growth for XRP and of course another applicant, and most likely a future user that has already been using RippleNet. And many ODL users that are using XRP today typically don't start with XRP, they start with RippleNet. So anyways, just an awesome thread. Roth is just an absolute must follow. He has all types of references down below. And then Roth also highlights the Ripple Liquidity Hub. I do believe this is going to be really big in the future. It's a crypto market aggregator. So it's basically putting all of these liquidity venues together so that you can source liquidity for crypto assets, not just XRP. So enterprises can source crypto. So we have over-the-counter trading desks. We have even decentralized exchanges and then other centralized exchanges as well. So we have Ashish Birla at the time comparing it to Kayak or Google Flights, websites that pull available flights or information together to get the best deal. Instead of tickets, think crypto. That's an awesome analogy. So why not use an over-the-counter desk or an exchange? It's risky to have a single supplier. Will there be enough liquidity? Will they charge a premium as the only source? If it was the only supplier in the market, they could hypothetically charge a premium and raise prices to use their services, or charge a premium on the spread. Would you trust your ETF supply to Coinbase or Binance in a run? So with blockchain technology, we talk about the importance of decentralization in distributing not just the trust, but distributing the risk, the accessibility. So with the Ripple Liquidity Hub, it is aggregating all of these liquidity venues together so that one, it's more liquid, it's more open, and everybody within the market using this can source crypto at the best available price that is incredibly trusted, and it can plug into all of the biggest suppliers today. So I think this is huge, and I think that Ripple Liquidity Hub is going to be ahead of the curve. I don't see a lot of other huge organizations or financial institutions or fintechs doing anything like this. I think that Ripple will continue to be a first mover. I know we're in a bear market. I know they're going face to face with the SEC after over 2 years. I know it's rough, but Ripple is still valued at $15 billion without even considering XRP holdings. So the demand for sourcing crypto, even tokenized assets, is global. Remember what a pain that Know Your Customer compliance and then anti-money laundering AML was signing up for your first exchange, putting in your ID, maybe a utility bill, any other stuff they need that technically could be sensitive information that you're risking giving it to an exchange. Imagine signing up with 50 exchanges across multiple borders, multiple assets, and billions of dollars. Ripple's Liquidity Hub eliminates all that hassle by gathering the assets from multiple sources and presenting them in a unified interface. This is such an amazing thread. And not only that, but with the ability to compare the different sources, you can see where to get the best price for any asset. So Liquidity Hub supports a variety of digital assets, connects organizations to a rich set of liquidity venues, exchanges, market makers, and even OTC desks to source optimized pricing via smart order algorithms. It's more composable and reliable than just one single source. You get 40% of your order from OTC Desk A and the remaining 60% from Desk B. Let the computer work out the cheapest option or the cheapest path. It solves some custody issues and in the future, even staking. And imagine when the Liquidity Hub brings you results from different DEXs or decentralized exchanges. Imagine integrating decentralized finance, all of it automated, aggregated and brought together, and neatly vetted for your shopping ease. No pre-funding required. Ripple will even front you the credit. So going back to the first point that Roth was actually sharing, remember Ripple originally signed companies to bilateral agreements with each place you sent to point, so just back and forth. Now we can see the better part of on-demand liquidity's innovation was creating a one-stop shop to source liquidity of any asset. So cool. And I know that's tons of information, guys, but be sure to follow Roth Economin if you're on Twitter. And also right here, with one Ripple Wallet Enterprise can source anything that can be tokenized, fiat currency, crypto, deeds, stocks, and now carbon credits all in one place. This is what crypto has talked about forever, and a regulated, secure, and reliable interface for popular use. And we can see the screenshot. And remember what I said in the beginning of this video with the tokenization of globally illiquid and even liquid assets today, and then new use cases of intellectual property. It goes incredibly deep, and of course, other things involving real estate that Ripple also came out with. Ripple is preparing for a tokenized future, an internet of value. And notice that all of the Liquidity Hub press seemingly mentioned NFTs. What better way to tokenize value than with NFTs on the XRP ledger, which is orders of magnitude more scalable and cheaper than Ethereum. So I really like this, the evolution of Ripple. It started with cross-border payments, then on-demand liquidity, then we have digital asset Liquidity Hub, and then one wallet to rule them all because it can source it all. And what about XRP? Because Liquidity Hub doesn't run on XRP, but just know that XRP, of course, is one of the main assets in the Liquidity Hub. The Liquidity Hub actually just finds crypto in general, but on-demand liquidity requires XRP. And remember that ODL, leveraging XRP, is still the cheapest, most robust settlement around, and Ripple still holds about 45 billion. So anyway, super cool. We can see different things like cross-border payments, check. We have crypto liquidity, and of course, central bank digital currencies with the privacy features for central banks. Roth's talking about the big picture, multiple investments in tokenization projects, Ripple X, etc. And then even Brad Garlinghouse emphasizing Ripple has partnered with several central banks around the world. Some we've announced and some we've yet to announce. And in conclusion, Ripple's Crypto Liquidity Hub is a one-stop shop for enterprises to source digital assets, all crypto, anything is welcome. It is also a milestone for understanding how Ripple is evolving towards a tokenized future in which the XRP ledger can also excel. Next up, we have the founder of Algorand, Silvio Micali, sat down with Citibank to discuss the fundamentals of blockchain, zero-knowledge proofs, Algorand, and more. And I forgot to mention Citi, they are a behemoth, by the way. And Citi is the third largest bank in the United States in terms of total assets. And per their financials, total assets over $2 trillion. We can see their revenue and net income. And remember that Citi predicts that the metaverse and also Web3, the revolution we are in today, may be an $8 to $13 trillion business opportunity. And if you're wondering who said that, this is right here, Ronitz, the global head of banking for Citi. We estimate in the report the target addressable market for the metaverse economy to be in the range of $10 trillion plus. We've talked about this before, but just mentioning virtual reality and then augmented reality, AR. I'm sure you guys saw, I think it was Nike. Some girl was wearing a hoodie and she has a QR code on the back of her hoodie as like a design. And when you use your phone to check the QR code, you can actually see that she has different types of clothing or maybe like cool wings or a cool virtual reality or augmented reality tattoo on her. So basically, I know it sounds silly, but kids in the future and teenagers are going to be doing this and flexing different digital collectibles that are augmented when you use your phone, or in the future if you have contact lenses, as crazy as that sounds. So that's a massive use case, and of course, we will be accessing the metaverse with different smart devices, phones, VR, and AR headsets. And remember, this metaverse economy is going to be leveraging non-fungible tokens fueled by cryptocurrency, including in-game tokens, stablecoins, and of course, CBDCs. Now, we've talked about the differences between CBDCs, stablecoins, and then of course specific crypto assets. No, I don't like central bank digital currencies. I'm not cheering for them. But what I am seeing is digitalization is coming, whether we like it or not. And I'm going to be making the most of it. Now, speaking of Algorand, we have what a year for Algorand. And this is shared by iTrustCapital. I mean, yeah, what a year. I'm not happy with the price performance though, but we can see they've brought executives from Ripple, Cardano, JP Morgan, Citi, Visa, and Fidelity, 2,000 plus projects. Over 29 million addresses and over 6 million plus NFTs. Over 6,000 transactions per second for 3.7 second finality. We have 26 million blocks, uptime, no forks. We have right here solving the blockchain trilemma. We'll see how it does at scale. You know, I'm a huge believer in algo. I've owned it, or at least have been trading it since 2019. State proofs are huge. We have the AVM, or the Algorand virtual machine, basically the engine for smart contracts, and of course, quantum security, which I think is huge. And if you want to learn more, you can actually go to the Algorand developer portal and you can kind of learn about the basics, just like xrpl.org for the XRP ledger. You know what, we'll talk more about HBAR in the next video, but we're going to finish up with this. So right here, we're looking at the HBAR price chart versus the US dollar. We're on the 3-day time frame, and I just want to show you that HBAR, since the inception in 2019 of September, has been around, give or take, let's just say over 1,200 days, 1,200 days. Now, when we're looking at the RSI, or the momentum right here, we can see the peak when it was overbought right there, well above 70. We had that peak. We also had another peak here, if you want to count that. We also have another peak. I'm just going to choose the highest of the three right there, okay, when it's overbought, and then another peak there. I'm actually going to measure out each peak per the RSI when it reaches that peak at overbought territory and measure the number of days in between those impulses. So now turning the lights on, a vertical line right there at this overbought territory to the next one. So peak to peak, 183 days. We have the next one from the peak of the RSI to the next highest peak, 213 days. Now from the next peak right here to there, also 183 days. So what are the odds that this rectangle and this rectangle were each 183 days apart? And now since the last peak, guys, this is the longest we've been in a bear market for HBAR ever. We can see 481 days. That is absolutely insane. Now, of course, you could attribute it to the increase in circulating supply. Now, the good thing about HBAR is they have a finite total supply. 50 billion is the max cap. The downside is that we still have more to be unlocked in the coming years. Now, of course, you could argue, hey, if we're actually solving multi-trillion-dollar issues, that's not going to matter. Utility is going to do just fine. But we're still in early days. I know that we have some of the world's largest companies on Hedera's governing council. If they build applications and they're using it at scale and there are billions of transactions per day, that's going to be awesome. And yes, HBAR, the token, theoretically would increase in price due to the demand and a scarce supply eventually. But it's just been pretty crazy looking at this, and we have yet to have like another big wave. So I'm looking at this rectangle and comparing this type of fractal, or at least the RSI position, to this one. We can see in this circle, this was another distribution or a mini sell-off, technically accumulation on the macro before it exploded again. What if we are actually in another circle right now, but it's actually drawing significantly longer, meaning that we are actually finding our bottom for HBAR before we get that next impulse up? If you enjoyed this video, I'd greatly appreciate hitting the like button and subscribing. Let me know your thoughts down below. And as always, my link tree is linked right in the top of this YouTube video description with all links, crypto resources, and discounts. I'll catch you in the next one.